Good morning, good evening, good afternoon, everyone, wherever you are watching today. Today was a little bit of a quiet day in markets, although we did get some data out of the UK and the Eurozone. The big main focus though for this week is going to be tomorrow. We have CPI out of the US, which is going to be a huge determining factor for US interest rates in the future. And we also have the Bank of Japan making their rate decision. Also, tomorrow we do have the ECB and Bank of England also making their interest rate decisions. I'll go ahead and unpack those and see how I plan on navigating that. So without further ado, let's get right into it. All right, so out of the UK, we did get CPI year over year come out for the UK, and it actually came in cooler than expected. Highlighted in red here, it came in at 3.2 versus previous 3.6, and the expectation was actually 3.5. So that cooler than expected CPI is good for the Bank of England as far as rate cuts go. It gives them the green light to continue with their rate cut cycle, and so that caused the British pound to go ahead and depreciate. So we actually did see the British pound take a hit. If I go down to the 1 hour time frame here, we did see that from the morning time, we actually dropped about 60 pips on that release. British pound went ahead and dropped there. It has retraced some, and it now seems to be kind of trading back lower a little bit. However, I do believe that it's going to stall out just until we get that CPI for the US. That's going to be a huge determining factor for price action direction. German IFO as well missed expectations there, and the CPI did cool as well for the Eurozone. However, the Euro interest rate is already at 2%. They do intend to go ahead and have a rate decision tomorrow. However, markets are expecting that the interest rate in the Eurozone is going to stay flat just because they are already near that 2% target. For the Bank of England, they do expect rates to drop to 3.75. We'll see what happens there. And it seems like the Bank of England does have probable cause to continue their rate cut cycle. For the US, on the other hand, there is a juggling act between jobs and inflation. We do have some sticky inflation. In fact, right now, inflation CPI is at 3%, and they do expect it to rise to 3.1%. If we do get a hot print in CPI, then the Fed will probably address that by holding rates for longer. That will give a little bit of a boost into the US dollar. However, if you do see a cooler than expected CPI, then perhaps the Fed can continue with that rate cut cycle. At the moment, the market is expecting 2 rate cuts for 2026. So we'll see how this shifts the narrative. We also have jobless claims expected to come in better than expected. Remember, the number coming in lower is actually good. And later in the evening, you have Japanese CPI and the BOJ rate decision. They are expected to increase rates by 25 basis points, so 2.75 there. However, that is tentative. The Bank of Japan usually doesn't give a affirmative commitment to a rate decision. However, it is expected that they raise the interest rate slightly. That forward guidance is going to be very, very important. As you see here, they have the BOJ. Going into the charts, I do have a trade on the pound short filled in somewhere around here, so I'm pretty much break even here. If we do get that cool CPI, then this trade will go against me and I will get stopped out for a loss. However, if CPI comes in at expected or even hotter, then I can foresee that this trade continue to play in my favor, and then I will probably just target, these lows or even lower. The tricky part is that, it missed my take profit by a hair. My take profit was just around here, so we did kind of miss a little bit there, but that's okay. We'll see how it plays out tomorrow. If it's a loss, then it's fine. I considered the risk in it, so I am okay with the idea. Aussie dollar, a trade that I was willing to go ahead and take for the long side. However, I did mention in my live streams before, the A1 trading group, I was going to exercise some discretion as far as this level here. I did say that technically speaking, we get this pullback, we have a easing Fed plus an RBA that's hawkish. That would be a great reason to go ahead and go long Aussie dollar here. However, with the CPI still not behind us, I would rather wait for that, because if we do get that hot CPI in the US, this can actually continue to trade lower. And if I just exercise the discretion, be patient, then I could have avoided a loss. However, if we do get that cool CPI, again, I keep saying this, if we get that cool CPI, the dollar will go ahead and take a little bit of a dip. Then I can be on the right side of the V on this trade and trade the Aussie dollar back up to these highs. Euro dollar showing some pretty good relative strength here. This chart's a little bit tricky to navigate just because of these candles here on the daily time frame. But if we go down to the 4 hour, same scenario, right? Weaker dollar, this thing's going to continue higher. Stronger dollar, we'll trade this thing lower. It's just a matter of of knowing the actual direction there. New Zealand dollar, we did get some GDP figures in favor of the Kiwi. However, it is still trading lower. Again, looks like most of the price action is driven by the US and what's next to come for rate cuts. So although we saw that good GDP for the Kiwi, it's trading lower here on the day, on the open of the new day here. It's telling me like this whole trend, this whole thing is going to be determined by the US dollar and its rate cuts. Dollar yen will be extremely opportunistic if we get a US dollar that is trading on a cool CPI print, meaning it's trading lower. Then you add in a Bank of Japan that is looking to hike rates. You can definitely see that price action in the dollar yen trade super low. So that's something that I'm going to be mindful of. I will definitely be active in that case. So I'll be more specific here, right? If we get that cool CPI plus that Bank of Japan that's looking to raise rates, if the forward guidance in Japan is still on dovish camp, I'm taking a market order short. Stops will be wide and I will be targeting a level like this. This will be my first level. If we get a hot CPI print plus a Bank of Japan that continues to hike rates, no trade at all. If I get a hot CPI print and a Bank of Japan that is hesitant to continue cutting rates, then you can see this thing trade up back into this level of resistance. In that case, we are pretty much extended, still no trade. So the best course of action, the most probabilistic approach would be seeing a cool CPI print, meaning a weaker dollar plus a Bank of Japan that is looking to raise rates. That is a very good scenario to go ahead and short dollar yen. Dollar Swiss, my long-term play here, trading flat. I have a buy position. I'm really not seeing anything happening here. However, I do have positive swaps being collected, so that's a good thing. Again, this thing is going to be determined by the dollar tomorrow. My hard stop out level is below this level of support, so we'll see what happens there. Dollar CAD, truly not liking the price action here. We did come off of this very small level that I drew out, but it really doesn't really mean anything to me, to be honest with you guys. So no trade here on the dollar CAD. I'm going to go ahead and pass on this one. Yields are elevated here, so we're just waiting on that decision for tomorrow. We got the long end of the curve here is trading high. We have the 10-year yield still trading within this level. This was the FOMC dovish candle. We traded back up into it and now we're just rainbound. Again, all of this direction, all of the clarity is going to come tomorrow. It's just a matter of being patient for that. And that's about it for this one, short and sweet. Thank you guys so much for watching. I truly appreciate it. If you have any questions, feel free to leave them down in the comments below. And like always, have a blessed rest of your day and trade safely. Bye-bye.